Ben, what I think the Fed is going to transition to, and I know we're going to talk about it, is they'll admit there's some progress with inflation. Okay, you're going to probably share the screen, but now
Yeah.
they're going to start making growth the enemy, that we have too much growth still, and they have to remain restrictive. So that's really, going to be a tough argument for them to, say, yes, inflation's a little tamer, but there's still too much growth, meaning they don't like less inflationary growth. Right?
Yeah, I mean, listen, you guys had a great discussion today, and I love it when it kind of dovetails with some of the topics I have, and I'm going to touch on a
Are
lot of
you going
these
to
things.
share? Do you
Yeah,
have? Go
someone
ahead.
has to stop sharing. There we
I
go.
did it.
Now I can share. Yeah, I'll share the presentation, and we'll dive into it.
All right. You said something about that you and I don't need to take mushrooms like Yellen to do this trip.
Yeah, because we're going to take a trip back and forth in time.
Does Yellen go to San Francisco and do magic mushrooms?
No, what happened? I don't know if you read the story. She was in China, and they gave her mushrooms for a dinner, and they said they were some of them were psychedelics or something like that. I remember reading that headline. That's what the joke was referencing.
Oh,
so
wow.
Yellen,
that actually happened?
Yeah, it did. Go look. Just do a search for the story. Mushrooms in China, Yellen, and you'll see.
I have an important question. Can somebody tell the difference between under the influence Yellen and a normal one?
Steve, she may actually make better decisions on shrooms. So
yeah, she had some.
I honestly believe that to be the case. I think you're right.
Yeah, she was smiling and showed pictures of her, and she was bowing and smiling. I think she had a good trip.
I think she had a good trip.
A good trip on her trip to China.
A good trip, pun intended.
Exactly.
All right, buddy, go ahead.
So we're gonna do a couple things, and just to sort of give you a background of my framework, I kind of start with big cycles, and then the cycles are sort of wheels within wheels, where you got larger cycles, smaller cycles, and then we come down. So I start with a cycle framework to understand, what's the background weather, what things are favored, what things are not favored to happen, and use that as the initial filter. Then we look at fundamentals and technicals, and sort of putting it all together. Then we come up with an investment thesis and how I'm going to position my money. And again, if I have problems with my returns, I got to look in the mirror, because it's all on me. So today we'll talk about a couple major cycles, and then we're going to focus in on the inflation cycle. And you guys had a great discussion this morning about inflation and what's happening, and how are the policymakers going to react and everything. And I'll get into that. And if you remember last time, Dale, we focused on the war cycle, and that ties into inflation as well. So we'll reference that a little bit later as well. So we start with an epoch cycle. We are coming to the end of a 400-year cycle that has been governing sort of humanity, and how humanity organized societies, and the structures that sort of support society and support humanity. That is changing in the next 3-4 years, where the old cycle is ending and a new cycle is beginning. I highlighted key things that I want people to understand. We're ending the era of mega structures. So the big government, centralized power, all sorts of things that you're seeing in the death throes, which are grasping for more, right? They sense that they're losing power, they're losing support, and so they're trying to centralize and make power even more restricted to a few and not many.
So they're fighting the cycle with CBDCs.
It's completely predictable, right? Because at the end, what's going out and has been in power is going to fight and struggle to maintain it. And right now they're trying to increase it, as we've seen with, the censorship issues and surveillance.
So does the cycle say that they won't be successful in this environment?
They're going to fail.
Really?
They're going to fail.
Because best news I've heard in a long time.
And the key thing, Dale, is because the background frequency is not going to be supportive of it. Yeah. So it has been supportive of it for 400 years, which is why we have these institutions. One of the key things too is another feature of the end of this cycle is poor leadership is causing more problems, right? It's amplifying the fear, it's amplifying the insecurity people feel, and it's helping to lead to sort of the loss of faith and confidence in these very institutions. This is a list that I've, been sort of curating as we go along and events unfold, and I generally highlight new ones every talk, and I've put on this one, I think, really important ones. I think the destruction of the Republican and the Democrat parties is in full swing, and evidence of that is a record number of Americans say they are now independent voters. It's up to 49%, and that is a record. And I think it's going to continue because, again, these are older institutions, ways that we organized our politics that have lasted for years, and you can see them trying to grab for more power, trying to prevent candidates from running, trying to prevent third-party candidates from participating in major national elections. I think this is a perfect iteration of what happens when the Epoch Cycle comes through.
Was there anything in the Epoch Cycle, if you go way back, where you've had a situation where you had the same two candidates, two presidential elections in a row?
I think there were. I don't know offhand, but I seem to remember there was a rematch.
It looks like it's going to be that way.
I don't know what's going to happen next year at the election, but I do know cycle-wise, the second half of next year is when I believe the shit really hits the fan. So I can't say what's going to happen. I don't know if it's going to be a suspension of the election or some major problems with the election, but I would think that's going to be a focal point for sure.
How about the introduction of AI into the last 3 years of the cycle?
Yeah, that's kind of interesting, isn't it? Because to me, it feels like it's a natural progression in that the people in power can certainly want to use, they certainly could want to use AI, but it also makes the individual pretty damn powerful, having that at your hands, if we have it at our hands, right? And that gets to our next point, which is this sort of erosion of faith and belief in big tech because of the things that they're doing with the data that they have, the censorship that is now coming out that they've been a party to, sort of partnering with governments to censor people who have a different viewpoint. It's really surprising to me because, the last 20 years and everything, as you mentioned with AI, tech is so important. But I certainly sense that there is a suspicion and a distrust of big tech that is growing and wasn't present 10 years ago. So I wouldn't be surprised to see sort of ramifications with big tech. How it's going to play out, I have no idea, but it's definitely on my radar as part of this Epoch Cycle.
So maybe they break up the companies because they're too big, or
could be, again, and that would fit with the smaller. Remember, the world's not ending in 4 years. Just the world as we know it is ending. There's something new coming, and one of the hallmarks of that is smaller, more self-governing tribes and communities as opposed to a large centralized system. So maybe we do get a breakup in tech and more, smaller type iterations instead of the behemoths that we have.
Okay.
This is a part where we're tripping for sure, because we're heading back into the 70s, and the cycles that we're experiencing today are directly connected in my work to what happened in the 70s. From a presidential standpoint, we had Nixon in the 70s, we have Trump, and you can see in the list that we've gone over many times, the similarities in terms of events. And remember, nothing is exactly the same, but it rhymes, it has the same rhythm. It's there. And we went from Nixon to Carter, and now Trump to Biden.
Okay, I have a market question based on that last slide. You have the Nifty 50 up there.
Yep.
And recently we've had, use a basketball term, the Elite Eight
Mm-hmm.
that have led it, and they've been weaker. And people are just saying it's rotation, and they're moving out of those and into the broader market. What happened after the Nifty 50 peaked? Did rotation save the market?
No, it was
So it
bloodbath.
was rotation bullish?
No.
Okay, so because that's really, that's a narrative that's floating around is, tech let it up, but tech won't hurt it if it heads lower because the rally has broadened out. So
While
maybe,
that
go ahead.
I was gonna say, while that's possible, it sounds like a hopeful bull talk.
Yeah. So the other things may not fall as hard as tech because maybe they're the next cycle. Anyway,
Yeah,
go ahead.
yeah, we'll see. So, and here we are today with the parallels between Jimmy Carter and Joe Biden. The ones that I've highlighted, I think, are really important because I believe this is the phase that we're moving into. In the 70s, which we're going to go over in a minute, we had 3 waves of inflation, each with a higher high and a higher low. Is that going to happen again? No guarantees, but certainly the background weather is there for it to happen. We had a commodity boom in the 70s. We had the first leg up in commodities, then a sharp correction over the past year. I think the next leg up in commodities has started and is starting. And that's obviously going to have ramifications on inflation and economic activity. And then, as you guys were discussing, the Fed policy mistake. I believe we're going to see more policy mistakes. And I'll ask you a question, Dale, because I think this is important. Let's say we do get a Fed policy mistake. What direction do you think is likely for that mistake to be?
Well,
like too tight, too loose?
Well, now it's too tight. And
Dale, by the way, you sound far away, just letting you know.
I'm so far away.
That's much better.
Yeah. Okay. So I think they're making a mistake, and maybe it's by design. If you really want to know what I think the Fed wants to generate a banking crisis to have a reason for people to accept CBDCs, because there's really the only selling point for them is convenience, and you don't use paper anyway. And people don't like change unless there's some fear that motivates them to change. And
Sure.
people are already worried about banks, and if it gets worse and we have a banking crisis, be perfect rationale for converting to CBDCs. And that's a takeover of the banking system by the Fed, in my view.
Interesting. The thing that I was thinking about the other day is Jerome Powell, right? He's a PE guy, worth more than 100 million, something like that. That's been reported. What's in his mind right now? Like, why did he take this job? To me, somebody takes that kind of job and takes on that pressure because it's all about legacy, right? That's what he's playing the game for now. It's not for money, maybe for power, but it's about his legacy. Like, how's he going to be remembered? And the stuff I've read on Powell is Powell wants to be a Volcker.
Right.
He doesn't want to be a Burns.
Right.
And so if that's true, right? If that read is true, and again, I have no way of knowing. I don't drink beer with
he'll stay
Powell.
tight too long.
The mistake is most likely going to be on the tight side.
Yeah.
I mean, that's where my thesis is. I obviously could
Already
be
is.
wrong.
Already
So
is.
let's see. Let's see what happens.
Okay.
And let's see how the mistakes that are made.
Okay.
So let's get into inflation, because this to me is the key to the markets right now. If you get inflation right, you'll be positioned properly. If you get it wrong, you're going to be wrecked. So getting inflation right is key. As I mentioned, the current time period, we're connected to the 1970s. In the 1970s, we had 3 waves of pulsing inflation. And we're going to go over the numbers so you can see it both in charts and in graphs. And the other thing that people aren't taking into account, because they probably don't study cycles or it's not a part of their repertoire, is this current period for the next 3 to 5 years. The cycles are supportive of shortages and limitations. Simple supply and demand, simple economics. When you don't have enough of something, prices go up, right? That's going to mean that the mistakes are going to be on the upside for inflation, not on the downside.
Magnified.
And the big one that Blake mentioned is absolutely spot on. You must be focused. Commodities are one thing, and we're going to go over that. Commodities are in tight supply. There's been an underinvestment in terms of capital into new supply, and it's going to have ramifications in terms of the supply-demand balance. But in labor, and not a lot of people are talking about this, Blake mentioned it, we are in a position to have a wage price spiral again. And I'm going to give you about 5 examples of recent contracts that were signed by unions with major companies and city workers that are, they're baking into the cake that we are going to have inflation. The other one that's on everyone's mind, but not so much anymore because it's sort of died down a little bit, but this reverse globalization, it's real. And I'm going to show you some figures about manufacturing in the US, about new plants being built, massive plants that are being built, where goods are going to be produced here, which is great because it'll be dependable supply, but it's also going to be higher cost labor. Therefore, the products are going to cost more. And of course, in every crisis, there's an opportunity. So we're going to look at the opportunities and what we can do. This is, I think, important to look at because it shows month to month CPI from 1970 to 1980. And I highlighted the peaks and the troughs, right? So if you look where we are currently, we're probably right in here. It's early 72. Inflation's coming down. It's been coming down for a while, and we're heading out to this level where it's going to bottom out and start moving up again. And if you notice, we peaked in January of 1970 at 6.2. We came down to 2.7 in June of 72. The next peak was 12%. And the final peak in 80 was almost 15%. So once inflation gets going in the economy, it's really hard to wring it out. And there's a lot of spiking of the ball right now, mission accomplished talk that inflation is dead, it was defeated, and how great they were. And see, it was transitory. If you're talking about Paul Krugman, it's not. And the echoes of it are there, and it's baked into the cake. And I'm going to show you how with labor. Here's a graphical representation of annual inflation rates, again showing you the peaks, right? Higher highs and higher lows. There it is in chart format. What kind of pattern is that, Dale? 3 drives.
I don't see. We need one more low.
Yeah.
Oh, you mean at the top?
At the top, yeah, at the top in the 70s.
Yeah.
Nice 3 drives.
Yeah. Some guy talks about that. That's all he knows.
And then here's my homage to Dale. 3 drives from the Fed coming. There it is in the 70s.
Yeah.
So is it going to repeat exactly? No. Is there a decent chance it's going to rhyme? Yes. The other thing, we talked about this at the last one about war. War has a dramatic impact on inflation. Just look at this chart.
Yeah.
So if we are in a period of war, and whether we want to admit it or not, we are in a war because we are funding a war, that's going to fuel inflation.
Okay.
Let's talk about shortages. This is the one I think that is most important to focus on right now, which is the labor shortage. There is a shortage of labor, and it's not going anywhere. And when simple economics, when you have not enough of something, the price of it must go up. So is that happening? Well, we have had 8 consecutive quarters of union wages that are accelerating. Right now, contracts are being ratified where wages are on average going up 7 to 8% on average. Here's 4 examples for you.
The question, Ben, is what do you think inflation is at the moment? I mean, really, because we know the nominal increase in wages, right? Because it's nominal. The question is, how much is inflation at the moment? Really?
Way higher than being reported, that's for sure.
Yeah.
And they make adjustments all the time to try and keep the number lower. What I think is happening, Steve, is that if you look at these 4 examples, you got very different companies, very different industries, right? City of San Diego, New York Times, United Airlines, and Disney. The wages are going up. Yes, it's in nominal terms. The point that I'm seeing here is not whether they're getting like a real increase or if they're better off, but it's the companies are going to have to make a choice. Do we pass on those costs of higher wages in terms of higher prices, or do we eat it and have our margins go down dramatically?
Even if they eat it, we all very well know that they can't do that forever. They can do it for a very limited period of time. So eventually it all comes back to the price.
It's going to come into the prices that you and I are paying for these goods and services. And I think this is a point that is not being talked about by a lot of people, and it's not being factored in, is that these
people aren't going now. They're having they're not getting a lot of crowds at Disney World,
right?
Florida now, and the consumer's supposed to still have excess savings. So I don't know how they're going to be able to raise prices if the economy weakens.
And I mean, look at these things. You're talking about 7 to 10 to 12% raises on an annualized basis.
Yeah.
It's gonna have an effect. What's that effect going to be? Actually, and absolutely, I don't know. But you know, the odds are it's going to end up in higher prices for the products we pay. Commodities. Let's talk about commodities, because there's been a lot of talk about, because we're going into a recession, the demand for commodities is going to collapse, so commodities are not an issue. I think right now, tight supplies is a bigger factor than demand destruction. Especially in certain markets where the supply demand is out of whack. In the physical market, oil is an example, copper is an example, and silver is an example. And I heard you guys talking about silver and it's saying how it was stronger than gold. I think it's related to the fact that all this green stuff that people are using requires a lot of silver. And let's look at some of the deficits that we're seeing. Oil markets. This big spike is your COVID, but they've been in consistent deficits, basically, with a few times when we went into surplus. And there's not a lot of CapEx going on here. Not a lot of supply is coming on the market. So if demand stays where it is or increases and we've got less supply, you're going to have higher prices. And, you know, oil is the engine of sort of commodity inflation. Metals. Copper is a market that is in serious structural deficit. And I think, again, the economic worries about copper, we're going into recession, things are slowing down. What about China? If you look at copper, technically, it's been triangulating for a while. not really going down. When and if we have these supply issues and demand doesn't collapse, that's when you get a big move in something like copper. This is one I wanted to show, again, going back to the war theme. Every time there's a major war, commodities spike. Question is, are we going to have a major war here? Hopefully not, but it's certainly, the ingredients are there for that kind of stew. Let's talk about the reverse globalization. We are having what I call a reshoring boom. Just in the first quarter alone, these are 5 major manufacturing plant construction projects that occurred. The only thing I will point out, they're related. 2 out of the 5 are related to the green technology and batteries and sort of the clean energy, and that leaks back into helping copper and silver. So that's supportive of those themes. And the other is the semiconductors, right? And that's sort of a strategic thing. We need those supplies secured, and we need them secured here in this country. The bottom line is
we may need secured supplies, but there's a glut of semiconductors on the market right now.
There is, and that doesn't belie the fact that the semiconductors manufactured here are going to cost more.
Okay.
The batteries manufactured here are going to cost more. It's because the labor costs are just not going to be as cheap as they are. And
so why are people going to buy what's manufactured here if they could get it cheaper from China? If we're not in an all-out trade war about that.
Well, that's
or
the
from
point.
Taiwan.
You said it. The big question is if you can get it from China. You may not be allowed to, right? Because they may not allow them to sell them.
Well, we're the ones that are doing that.
Absolutely.
Certain chip technology.
Right.
Okay.
Let's go to the next one.
Glut.
So let's talk about the opportunities. Here are the things that I'm looking at. Number one, I'm looking to sell risk tactically. I don't think you can just close your eyes and go short, because you have to be a trader. And I don't see their cycle wise a major panic until the second half of next year.
Well, that's different than previous presentations, right?
Yep, absolutely. It's going to be, sort of tactical shorts where, you take a 3 to 5% drawdown on it, or a 5% move, an 8% move, but not the big 20, 30% moves. I think.
Why did you move your time frame?
Based on the cycles. I did some more work on them, looked at what was actually happening today, and then matched it up to where it fit with a period where we're not going to see the panic until the second half, which also fits with the real estate cycle. Because the thing that was bothering me is I didn't see the big collapse in real estate until late 24, early 25. And I'm like, how is the market going to tank if real estate's still holding up? It just didn't fit economically. And so this is a better fit. So I'll show you a couple charts on selling risk, couple Epoch Cycle plays. We'll look at buying commodities with a focus on energy, agricultural, and the metals. I think you got to long the US dollar, and I think you got to sell bonds. And we'll get into them real quick. Before we jump into those, let's look at positioning. Look at where commodities are now in terms of the weighting and positioning. Not real popular at this point. Certainly were popular last April, right near the high. So anyway, that's good news for commodities. How about the dollar? Can't find many people bullish on the dollar right now.
No, you can't.
It's also good for a long dollar. So let's see. ES. I think we're near in the range of a top, like within the next 2 to 3 weeks, but I'm not going to be selling it until I see a move where we get a lower low and a lower high. And that'll be the clue. So to use the words of my friend Dale, the ice is cracking, but we're not quite there yet.
What do you make of the divergence between big tech and the S&Ps, and the S&Ps could make new highs here without NASDAQ.
There you go. NQs.
Yeah.
They were leading on the way up, and I think they're leading on the way down now.
Yeah. They look like they've peaked.
Again, I'd like to see a rally that gives us a lower high,
Yeah.
and then we got something to sell against, and that's what
Yeah.
I'm looking for in the NQs as well as the
All right,
ES.
NQs, make it convenient for Ben.
Yeah, give us a little lower high.
Yeah. Give us
Here-
a classic failing rally.
Let's look at the Epoch Cycle plays. Gold, right?
Yeah.
If the current system is failing, gold is a safe haven. So gold is an Epoch Cycle play.
Can we buy it at 18 again?
It's possible. Yeah. I mean, this for me is big time support right in here. So I think for me, I've been buying physical gold. So it's just like on weakness, you buy physical gold, you take delivery and you put it away and you wait.
Where
for
do you put your physical gold, Ben?
Oh, I got a couple storage places.
Yeah. What's their address?
Anytown, USA.
Can we visit them when I come to see you? Okay.
So funny.
Go
Silver.
ahead.
Silver's a two-edged prong here. I think silver, you got the Epoch Cycle play because silver's money, but you also got the green play, right? If we are moving to this clean energy, they got to have silver and a lot of it.
Could we see 20 again, Ben?
I think all those metals could, they could be a washout move because you're in this triangle bull crap, that we got to deal with.
Yeah.
So they could have a move down like that. But again, we've been seeing these, you had the low
higher lows.
Higher lows, man. That's what happens before takeoff.
Yeah.
So maybe we see it, but I wouldn't count on it.
Okay.
Bitcoin's the other one. I'm not a Bitcoin guy. I had some on this run up, sold it too early, of course. But I do think it fits with the Epoch Cycle in terms of an alternate system controlled by individuals. So but I think the path is sort of down big and then we go.
Okay.
So I'm
Where's
looking.
That box? Where's that box coming?
The box is like 12 to 9,000.
What's the time frame? This year?
I don't really know in terms of timing on Bitcoin because I don't have a lot of data. It hasn't been around that long. So I was thinking, if we have a panic and people have to liquidate to create cash, maybe it's late next year, early 25 type time frame where we get that panic. But we'll see. I mean, you could follow the technicals. While they're crazy markets, Bitcoin is really harmonic and it really responds well to technical. So just use your technical analysis and trade it.
Okay.
Energy. I think crude, you mentioned it, Dale, we had an important breakout. The turn is coming there. If crude is moving higher, tell me how we're going to get lower inflation prints, right? The base effects are going to work against you starting in about 6 months.
All right. Show the good stuff now. Get to agriculture.
Yep. We'll get the eggs. Nat gas, one I've been talking about. I think that it's poised to move. We got a nice bottoming formation there.
Yeah.
There's Dale's brilliant idea. We talked about this probably a year ago. You said get a silo.
Yeah.
For the first time, you said it on one of our talks. I think you can buy wheat. I think you can buy corn. I think you can buy soybeans. Yeah. They've corrected. And again, just go back and look at history. These things move in waves, right? That big spike that we saw, on the Russian invasion and all that garbage last year, I think that was spike one.
Yeah.
There's more coming.
It looks like two because you have one to the left.
True. So maybe that's
it looks like there's one more left.
And I think we got one more big one.
Yeah. That'll take that double top out.
Yep.
Yeah.
And that's the same way with a lot of commodities.
That's my Nostra Maldonado.
There we go. Here's one I've been pointing out to a lot of people, on my thread and in the weekly talks we give.
Yeah.
Cotton, man, this thing triangulates. And when it's done triangulating, it moves and it is starting to sneak up. If you look on this is a monthly, but if you look on the daily, you can see the higher lows. You can see the channel it's been stuck in. Look at what happened the last time we did a triangle right here.
Yeah.
Boom. And I think that's coming. And I don't know what's happening. I don't know why fundamentally, but cotton sure looks like it's ready to move. Copper. We talked about the triangles. This thing's in a triangle.
Yeah.
Not going down, not going up. It's frustrating everybody. But man, this is a nice consolidation on top of this, these previous highs that we made.
Yeah.
This thing looks ready. And again, the green stuff all means we got to use a crap ton of copper.
Okay.
The dollar. Blake and I were talking about at the beginning about the dollar. I think this was
you nailed it. So how come you just call Blake? I know Blake's here.
Because Blake put a post out, and I just responded.
Oh, he tweeted at me. He tweeted at me, and I saw the tweet, and I was like, "Oh crap!"
Because you tweeted something about the dollar, and I said, "Hey, it's probably going to be a false break." And then I didn't say why, and then I said, "Oh, man, I kind of should explain why." And then I said, "Well, there's this ABCD there," and I think that finished it. So let's see, right?
And you saved Blake like thousands of dollars.
That's awesome. That's awesome. He's a good guy. I'm glad I could save him some money. But look at this. If the dollar turns here, that's huge.
Yeah.
It affects
You're
everything.
Looking for like 140 or something.
It's possible, right? And that
I'd be happy with 108, 110.
Everybody has to remember this about currencies and the dollar. The problems of America are well known. We have massive, massive issues that I have no idea how we're going to solve them. But Forex is comparative, right? Where's the money going to go when the shit hits the fan? Pardon my French.
The new BRIC currency,
right?
China.
Yeah, it's good. You're going to go trust China, right?
Yeah.
You're going to trust India. You're going to trust Argentina.
Oh, especially.
Right.
Yeah.
No, the money's going to come to the dollar. So is this going to happen tomorrow? No. But is this going to happen over the next year or two? I think so.
That's a wrecking ball.
Yep.
So you're saying it only wrecks financial assets and not commodities. That commodities will fight the impulse of the deflationary forces of a strong dollar. They'll go up with a strong dollar.
Yeah, it's going to be like the 70s. We had the dollar, a strong dollar, and strong commodities.
That's going to have people confused.
It's going to be, it is going to be a paradigm that most people don't understand or haven't studied, but I think that's what's going to happen.
Do you have
I think you got a short
pair of dimes? Do you have a pair of dimes? Preferably pre-1965.
Exactly. Get the silver ones.
Yeah.
And I think you got to short bonds, man. I think rates are not coming down. And for the reasons we reviewed, I think the odds are, does that mean short-term rates aren't going to come down? Maybe. Yeah. Maybe you get recession fears and you see it. This is a monthly. I'm talking bigger time frames. Yeah. The regime has changed in terms of, lower rates, low inflation. It's going to be higher rates, high inflation now. And if you look at the last time it happened, it was 14 years. Does that mean it's going to be 14 years this time? No. But is it going to be longer than 3 or 4 years? Probably.
Nice review, Ben.
So that's kind of where I am. I don't know if there's anything else you want to talk about.
Ben's left it all on the table.
Yeah. I mean, shoot your arrows at me. I get it. And I'm okay with being wrong.
I can't because you took that retweet button away.
No, so it's back. It's back.
You couldn't. Yeah. All right, good. All right. Ben, follow Ben. He does great videos with his partner. And Ben will keep you straight. So
we try and just kind of tell it like it is, and if you're wrong, remember, in this business, it's okay to be wrong. It's not okay to stay wrong, right? When the market tells you you're wrong, you got to have a point where you say, okay, I'm wrong. Save some chips, pull them off the table, reassess, and then reattack.
You guys have any kind of business model? Or
no,
you
man,
guys are just trading your own accounts still, both of
just
you guys.
Trading own accounts and just sharing the work. Kind of makes you accountable, right? You can't. When you put it out there, you're accountable. So our business model is accountability.
Like it. All right. So there you go. No extra grind with Ben. Make him part of your intelligence gathering. I don't follow this stuff enough. So Ben, wish you and your partner and all the people that follow you and that are learning from you and making people aware of this epoch cycle that most people never would have heard of if you hadn't have, gotten out there and spread the word. Thanks for being a watchman for everyone and here as well in F.A.C.E.
I always appreciate it, Dale. It's great coming on with you guys. You do terrific work, and same thing. You guys are spreading the information to people and helping them, and that's awesome.
Edify and build up traders every day.
Amen.
All right, buddy. So my trading warrior brother, Benn Maldonado, everybody.
Thanks, Dale. Take care.
All right. And I believe the morning edge has started right now, and I'll see everyone tomorrow.
See you soon.
Adios. All right.
Bye-bye.
Thanks, Ben.
Bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.